Hey everyone, it's Alissa Coram here. Now it's February, so love is in the air, but is it in the stock market? Well, I am catching up with Deputy Markets Editor David Saito-Chung, who's an expert on all things conviction, to talk to him about that and contrast that with falling in love with a stock and why you shouldn't do it. So let's get to it. So Dave, conviction is a great thing to have when you're investing, but falling in love with your stocks, that's not what we want to be doing.
Absolutely, Allie. And love has its place in our lives, and it's really not a good place for the stock market because we really want to focus on a system that really works in both good markets and bad. It's easy to fall in love with stocks, as you said, especially when they're going up so fast or so strong that you want that relationship never to end. But in reality, there is a time to be exiting any stock you have because the market does go through cycles.
Yeah, it should be approached more like dating than marriage, because with dating, you're going to look at the prospects, kind of, do some scoping out, but if something goes wrong, you got to cut and run sometimes.
Totally true. That's such a good point, especially if you're active, if you're an active trader and you start a relationship with a stock. Oftentimes you want to be right that it's working for you, and unfortunately it breaks your expectations. And often I've seen many traders, many investors get infatuated with trying to be right in a stock that is not acting right. So we do have some very important sell rules, some ways to exit that kind of proposition, and it's making sure your losses are small. And by doing that, you don't allow the emotions to take over your trading or your investing. So, at the very most, never let the stock fall more than 7 or 8%. You can always even cut the losses further. Not only save your capital, save your emotional capital, and invest in a better name that will turn out to be a better date.
Yeah, that cardinal sell rule right there, a very important reminder. Sometimes investors can also just fall in love with investing itself. Maybe not an individual stock, but just feeling like they need to be trading, they need to be making money. I mean, there's so much exhilaration that can come with making money. So why not trade all day, every day if you can?
Well, absolutely. Given what happened last year in 2021 with the meme stock phenomenon, it seemed like everyone and her brother and cousin got involved with the stock market, and it is very exciting. Just as you mentioned, the adrenaline rush makes people want to trade constantly. However, it's not really a recipe for continued success in the market. So we really stress the importance of having good buy rules, sell rules, and sticking with that, to be passionate about your system and not just simply to trade passionately.
Very well said. And something else that I want to talk to you about is this concept of conviction and
Mhm.
doing a little compare contrast with that and falling in love with the stock. And Dave, you've very well been able to harness the rules that we talk about all the time. But I think another great thing about your perspective is that you are able to have that conviction. And it's something that we get asked about a lot of the time on IBD Live, and maybe some myths to dispel a little bit, because to some people they think, well, isn't having conviction just falling in love with the stock and disregarding the rules? But I would
Mhm.
argue that there's so much more to it, and it's not that you're disregarding the rules. It's that maybe after you have this leader and a big profit cushion, maybe you start treating it a little differently. It's not that you're disregarding rules, but maybe just using a little bit different of rules. What do you think?
I really agree with that. When you have a major bear market, for instance, and they don't happen too often, every stock really gets taken to the cleaners. And it's a time when the sellers really dominate and rule the market, and we follow what the market is telling us. So you take great winners in the past 5 years. Let's look at Apple, for instance. It's had a monster run, a beautiful relationship with its investors, right, since the end of the 2009 bear market. but there's at least 3 times when it did fall more than 30%, sometimes 40 to 50%, and that's a big hit to your wealth. So we believe that you shouldn't really marry any stock. There's no stock that will go up forever. The market itself, Ali, especially through the Dow Jones Industrial Average or the S&P 500, seems like stocks go up forever. But that's because there are changes to those components. So if if you use good sell rules and lock in some nice gains, wait for the stock to take a breather, correct in price, and then set up again, you can always buy back. You can always date that stock again. But I would also just like to add that our research at IBD shows that on average, the length of the run from the proper buy point to its peak is roughly 18 months. Now, some will last a little bit longer, a couple of years. Some will be really, really short term, just like what we saw with AMC and GME and the other type of Wall Street bets kind of stocks. So first, after you buy a stock or even before, know what kind of stock it could be and then act accordingly.
And I think the other part of conviction, to reiterate, is the story is just one piece of it. That is what can help you build that conviction. If it's a game-changing company and it has the numbers to back it up quarter after quarter and the price action to back that up. But if you are entering a stock maybe at the wrong time and it takes a hit, you don't want to just rely on that conviction and just be sitting on losses and losses that can pile up. Like you said, you can
Mhm.
always date it again if times are different and conditions improve later.
So true. If you happen to buy a stock near or at the top, alley, we've also found that the average decline from the peak is 72%. So just imagine a stock that you bought near 100 and without consulting charts or without consulting the health of the market, that same stock could fall to as low as 22, 25. And we've seen many stocks at the end of various market bubbles go down to single digits or even eventually get delisted from an exchange. So it's very important to know the risks, not just the rewards of the stock market. And that's why we really advocate falling in love with good rules as opposed to falling in love with your stock. As I said in the beginning, I think, and myself included, when I was new to the IBD system, is that it's easy to want to be right every time. I think that there's an infatuation with saying I'm right, the market is wrong. But that is also a very dangerous emotion that I hope everyone who tunes into your YouTube channel will always respect and follow.
Okay, Dave. Well, thank you so much for coming on today and sharing your wisdom with us. It was a pleasure as always.
Oh, you got it. So much fun being here. Thanks again for inviting me.
Well, I hope you enjoyed that and learned a little bit more about the difference between conviction and falling in love. Now, tell me about a time that you fell in love with a stock and what you learned from that. Always love hearing from you guys. And make sure you subscribe to my channel if you haven't already, because I do have a lot more investing tips and tricks and interviews headed your way.